Good morning. This is the market update for buy sell short for Sunday, July 8th. Another back and forth day on Friday. This time it was back with the another disappointing jobs report, sending the market down steeply, minus 170 plus at one point. Did recover later in the day, but yet again, just when it looks like we're starting to get some traction, some momentum, some speculators and gamblers into the small cap stocks, they whip out one of those 150 point sell offs and scares everyone back into the bomb shelter, where they hide out for a couple of days, the market bounces back, they get their balls back, and then some sort of other economic news comes out to blindside them, and it just continues to be more of the same. Friday's jobs report, 68,000 jobs. While at least we're creating jobs, but not the way we expected. Yet again, government jobs, another loss on that, 4,000, I believe. Since the Republicans have taken control of the House and we've gone on this nonsensical austerity push with regards to government spending, we've lost 1 million government jobs. Just think about that. Think about what a million more jobs would be doing to this economy right now. And I'll go back to the same old, same old. You do not cut spending when you're in a recession or in a quasi-depression like we are right now. But enough of that. Back to the markets. We start off this week with the July earnings parade. JP Morgan, Alcoa, first two out of the gate. So over the next couple of weeks, we're going to see a lot of earnings report, and that's going to be the driver for any sort of up or down move we see for the remainder of the month. Now, expectations have been really tempered with a lot of these companies over the last couple of months. So what we are going to be looking for is upside surprises from these reports, but we're likely to continue this same up and down movement that we've seen in the markets over the last month. If we look at the 15-minute chart, we are just, a chart of large up and down moves, which this roller coaster ride can be quite scary for a lot of people. And as I said, what sucks about this kind of up and down roller coaster move is it really scares a lot of the momentum to the sideline. And even though we see very nice momentum on days like this, the more times we keep seeing these steep sell-offs, the less inclined traders are going to be to stick around for longer than a day in a lot of these stocks. Now, I will say, if you recall, on Thursday in the video, I mentioned the McClellan oscillator. Essentially what this is sort of a momentum indicator. We were at nosebleed levels on Thursday, and I had mentioned that whenever the oscillator gets up there in the 90 plus zone, tends to be a warning sign for a retrace. And next day down 170 points. You can take these indicators for what they are. They're just something to keep in the back of your mind. Russell, nice big move over the last week, and then over the last 2 days, bitch slapped with the overall market. So where do we stand going into this week? The charts are really back and forth. We were retraced back to the 50-day moving average at 12,700. We had a decent little pop going into the close. Earnings reports are this week. We've got a lot of economic data coming out from overseas, from China, which is the big one they're going to be watching. Japan later this week as well. We've got the Fed meeting minutes coming out on Wednesday. So if we do not see some sort of bounce tomorrow, I think we'll see it on Tuesday in anticipation of the Fed meeting minutes. And, you're going to start to really hear a lot of chatter about QE3. The data out there right now is saying the global economy is slowing down. And the U.S. and China, even though the growth has been anemic here, have been the economic engine of the world over the last several quarters. So, when you think about that, it just tells you how bad things are out there. And I don't think the Fed is going to let this plane stall out and crash back into recession. So I would be very surprised if we do not see some sort of action at this upcoming Fed meeting. Anyway, let's jump into some stock charts. DCTH, what a gem of a play. All the way up to 2, all the targets hit on this one. This little hanging cross we see here on the chart typically indicates a top on this one. So if you are still riding this stock, I would probably trail my stops now to a $1.85 plus here. Maybe even $1.90. And actually, I'm going to do a video on this maybe later. And you recall when I posted this stock a week ago, I said that this was one of my favorite technical setups. And yet again, it has rewarded us nicely. I love these kind of setups. PIP continues to tread water here. Breakout 150. 200-day moving average is there at 157. Support at the 138 to 140 level. NVAX. Remember how this one would not break out 2 weeks ago down there at the $1.28 level? Look what it's done now. Look at that. 50% move over the last 2 weeks. So why are we looking at a chart that has pretty much gone up every single day but one over the last 2 weeks and actually has gone up on volume every single day? Look where we're approaching. Getting up there to be a rule of 2 stock. Now, even though this is in the nosebleed, we're going to have to give it a shot if it gets a break above 2 with $1.90 stops. 210 to 217 plus would be the target on this one. So definitely on strong watch for a rule of 2 plate. Now, what I'd actually like to see if we don't get a breakout tomorrow would be this, to see this one retreat back to the 180, 175 level for a few days before making another attempt up there at the 2. Because if we get a break of 2 on this one, we want to be in and out of this pretty quickly when it does so. BONE continues to tread water. Looks like a $1.40 is going to be the breakout on this one. AVII. Very, very close to breaking this little triangle formation out. It's probably going to take a move above the 50-day moving average, the blue line at 71 cents to set it free. But as you can see, RSI has been slowly treading higher, waiting to break that 50 level. Stochastics in the basement, which is exactly what we like to see. And if this one's going to go, it's probably going to go boom tomorrow. Just judging by this chart, it's gotten very, very compressed here. So I would look for a possible breakout on this one tomorrow. Netflix, what a monster this was. Look at this. Hit target in 2 days. 85 on the nose, calls up huge. And you recall, one of these great tools on big sell-offs charts is this Fibonacci retracement. Gave a 38% fib retrace of $84.97, $85. Hit it on the nose. Little overbought now, so let's see what happens. If you are still in this one, you should have booked at least 3/4 or to 90% of your position on the calls, and if you played the stock. And, what a great mover on this little breakout here. So breakouts, especially ones that are breaking through significant moving averages like 50-day, 200-day, are doing very, very nicely in this market. CBLI continues to coil here between the 165, 175 area. 180 is probably what's going to set it free, but I'd be a buyer on dips under $1.70 here with stops at $1.61, the 50-day moving average. Last but not least, DHT. Now the shippers have been doing very well over the last few days. Dry ships, of course, being the leader. A big move on this one recently. DHT is getting ready to break its 50-day moving average. It's on the pop scan as well this weekend. 68.70 cents is probably what's going to set it free. And this one is a slow-moving stock till it starts to break out. And a chart it reminds me a lot of is NVAX. Remember how this one's just back and forth, teasing us about a breakout, and then slowly started to break out, and then really started to extend its moves. We're probably going to see the same thing on this stock because it's notorious for doing slow breakouts. but you know, a couple of pennies here and there every other day, and before you know it, we'll be up there at that 80-cent target level. So going into this week, we've got some nice setups. Market still on the fence of what we're really going to do, but we did bounce off the 200-day moving average on the 15-minute time frame late into the close on Friday, and that was a pretty hefty sell-off on the jobs report, even though the bad number was expected. So probably what we will see is QE2 spin to get the market on a bounce move going into this week. So that's it for the video. If you've got any questions, shoot me an email, feedback, buysellshort.com or .net. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.